Good afternoon. Thank you for joining us. My name is Matthew Lee. I'm an associate professor here at the Harvard Kennedy School, and it's my pleasure to welcome you here to the Bloomberg Center for Cities for this afternoon's event with Professor Christopher Marquis. Christopher Marquis is the senior professor at the Judge Business School. Previously, he was a professor at the Harvard Business School and the Cornell Johnson School. He's an award-winning researcher, having published countless articles in leading journals on issues related to corporate social responsibility, institutional theory, and on business and society issues in China. His productivity across a wide variety of topics is the stuff of legend among us management scholars. On a personal note, I'd add that Chris is a generous friend and mentor who had a major impact on my own development as a co-author and academic mentor of mine when I was a doctoral student at HBS. So this afternoon's program will proceed as follows. We'll start with Chris giving a brief summary of his book, The Profiteers, and remarks about the ideas that he develops in his new book. We'll then have a conversation between Chris and I about a few questions that came up for me as I was reading the book. Finally, we'll reserve the last 20 minutes or so for questions from the audience. And with that, let me hand it over to Chris.
Hey, well, thank you so much, Matt, for the kind introduction. Thank you all for coming. Really wonderful to be here at the Kennedy School in this space. I actually spent 2017 and 2018 here as a visiting faculty member, and there wasn't anything like this. So it's really amazing to see this. I mentioned that because actually a lot of the ideas that I've developed in this book, actually, I think I can trace to some of my time at the Kennedy School, and particularly around the critique of business and the need for systemic change. So my book is called The Profiteers, How Business Privatizes Profit and Socializes Cost. I'll present a couple ideas from the book. Obviously, 20 minutes, I'm not going to present the whole thing. I can't talk that fast, but a couple things. So first of all, regarding the title. So it's very much a critique of our current business and economic system. However, if the publisher would have let me, I would have had a little bit of a longer title, and sort of after How Business Privatizes Profit and Socializes Cost would have and what we can do about it, because a lot of the book as well is trying to understand how businesses, in many cases, working with policymakers and the NGOs can actually help reverse some of the systemic problems that we have. So we need these changes now because, the world is in a tremendously dire situation. You probably hear this and see this all the time, so I won't belabor you with all the headlines here, but from climate, inequality, issues of systemic discrimination, there are really big challenges that we have in the world. And business, I think many times gets blamed for them, and I think rightfully so. However, as well, I think that business can help provide some solutions. Although, I don't want to sound like a Pollyanna, but I want to say that actually working very much hand in hand with policymakers is where we're going to end up. A major critique that I think is in many cases right on target as to why we're in this situation is that the neoliberal system that is really dominant nowadays has focused on an economic system where companies, particularly publicly traded companies, are beholden in a very short-term fashion to their shareholders. So in order to actually deliver quarterly returns, they sacrifice on a lot of environmental and social goods. And this has led to huge levels of inequality over the past 50 years and lots of environmental degradation. I generally think this is, at some level, a reasonable and accurate critique. But why I wrote the book and where I think that a lot of the solutions have gone wrong is that they've been focused on an idea that business shouldn't just focus on its shareholders, but should focus on a broader set of stakeholders. I think that sort of makes sense, like, okay, let's just not focus on this one limited group, but actually open it up and focus on a broader set of them. However, as I'll say a little bit about, I think this also introduces a lot of really serious problems that we need to be thinking differently about. So, this idea of stakeholder capitalism, businesses focusing on stakeholders, is really famously been introduced by these leading organizations like the World Economic Forum, the Business Roundtable, equally as elite. This is the trade group of the 200 largest US firms. Huge press coverage on their statement around business being responsible to all or committed to all stakeholders. I at the time thought, I'm not really sure if they'll actually follow through on that, but at least it gets it in the public conversation. But actually, I don't even think it's worth it getting in the public conversation based on sort of the progress that has occurred. The problem is, I think these actors have found is that when you say something, people will check later on if you actually do it. And this stakeholder capitalism idea of the Business Roundtable has really turned out, in my opinion, to be a big, giant greenwashing effort. So very early on, there were a number of case studies that journalists mostly picked up upon that really showed the inconsistencies. So you have this example here in the New York Times, where Marriott, a signatory to the Business Roundtable, as sort of an aside, is that Marriott is actually very involved at Cornell in its hotel school, where I used to actually be a faculty member. And the CEO of Marriott is always talking about their commitment to the Business Roundtable. However, as this article very, I think, astutely and accurately portrays, when COVID hit, of course, hospitality businesses have to make hard choices. You can't necessarily keep employing everyone, but they were very quicker than many competitors in laying people off, cutting benefits. Again, I'm willing to be open-minded about this. It's a hard time. However, at the same time, they increased their dividend and gave their CEO a raise. So this dichotomy, I think, really points to the sort of inconsistencies of these stakeholder capitalism pronouncements. So now we're 5 years into this, and there's been a number of academic and journalistic investigations of this. You could probably see them, I think, the Business Week, Bloomberg Business Week had something, The Guardian, a number of academics have analyzed this pretty rigorously. So I have a quote here from a study that's published in a finance journal by some academics at Yale and Columbia. And you can read this quote here: relative to peers, signatories violate environmental and labor laws more frequently, have higher carbon emissions, rely more on government subsidies, and are more likely to disagree with proxy recommendations on shareholder proposals, which are frequently around a variety of social good areas. I read that because it is really even surprising to me that they are doing worse on all of these stakeholder-focused topics than their peers. And I would have maybe not thought they would do worse. I thought maybe they just would do about the same. Another paper that analyzed this actually tries to explain this. Why are they actually doing worse? And they refer to it as like a moral licensing problem. So, this idea is more prevalent in psychology. Many of you, I see some head shaking, are familiar with it. The idea that if you do something good, you feel licensed to do something bad. So, I sort of got up early and worked out this morning. So having a donut after lunch, I felt licensed to do that. So, these companies, by saying that they're, stakeholder focused, actually feel emboldened to actually, violate that in more substantial ways, which these very rigorous analyses have shown. I won't belabor you at the point, but also a lot of the, governmental efforts over the past decade for companies to be more sustainable, they've also worked very hard to block, as well as undermining a variety of other programs. So you could on the one hand say the Business Roundtable, large companies, these are sort of bad apples. These are companies that they're just really focused on short-term profit. So of course you can't you sort of can't trust them. But I think the bigger issue is that this idea of stakeholder capitalism that they're supposedly following, and that is widespreadly believed. There's actually almost 10,000 studies in the academic literature that look at this idea and how being more stakeholder oriented is good for companies. So this is an incredibly widespread set of ideas, but I think it's actually problematic for a couple of reasons. One is I think it encourages firms to greenwash, not although there might be some greenwashing in the traditional sense where they're just communicating things and not doing them, I think this is a greenwashing in the term of selectively doing positive things to distract from other negative things. So it's like, oh, I'm doing this sort of shiny stakeholder capitalism thing. Ignore the fact that I'm doing all these negative things. So some of my academic research has looked at similar processes. I'll example that in a second. I also think it relies on very questionable assumptions that doing well, doing good leads to doing well. This is also something you hear a lot about when you're talking to businesses about sustainability. And clearly there are examples where companies have they install LED lights and they have some environmental savings, and this is like good for their bottom line and good for the environment. But those examples are minuscule compared to the big problems that business cause. And I think that, relying on this doing well by doing good actually distracts from much more fundamental reforms, which are totally necessary. And I think this Business Roundtable example in particular is one where, if they're able to actually convince the public and lawmakers, which I think they generally have, that, oh, this is in our interest, we have this win-win, we're going to do well, and this will lead to, do good, this will lead to us doing well, that there's much less pressure on them to do, sort of negative, or do sort of real reform. You see this today, interestingly, in AI company governance. A lot of the AI companies from Anthropic and OpenAI and xAI, Elon Musk's venture, are organizing as benefit corporations, which are companies that have governance that supposedly tie them beyond shareholder primacy. And I think that a big reason for this is they're trying to avoid regulation. So an example of this, a little more concrete, is Pepsi. So Pepsi is a company that is lauded for its focus on stakeholders. It wins awards. You can see this Just Capital seal they have here for being on the Just Capital 100, which is based on sort of stakeholder logic. They get written up for buying B corporations, and I'm sure they do great things in whatever they're being rated on. However, like, the fundamental business of Pepsi is pretty destructive, in my opinion. Sure, of course, we should all be able to drink, soft drinks if we want, but the focus they've had on the ingredients around high fructose corn syrup, which has been tied to being a carcinogen. Their Frito-Lay division has actually been exposed for actually making food more addictive. And these are practices which they actually lobby the government to be able to continue perpetuating. So that's sort of one issue. Also with pollution is another big issue. And plastic is a huge problem in our world, as many of you know. And recycling of plastic really is not working very effectively, but they're very actively telling people how they should recycle, et cetera. Okay. A second issue that I mentioned is this win-win logic. There's been a lot of debunking of studies that have focused on this idea that doing well by doing good, very thin evidence. So I think that the stakeholder logic around business reform is insufficient. Of course, businesses should do well by their employees. They should do well by their customers. I'm not saying that we should ignore, sort of ignore stakeholders, but this is a logic to actually sort of improve and reform and make the world better, I think is very lacking. So I think that businesses should be much more accountable for their underlying business model and what that business model actually delivers to the world. And that means that we don't just look at selective positives, but we actually dig into the negatives that result from the business production. So the subtitle of the book, How Business Privatizes Profit and Socializes Cost, focuses on the concept of externalities, which I unpack a lot in the book. And you can see here it illustrated by this nice little graphic from a New York Times article from a couple of months ago that I highly recommend. Very good discussion of how much of what we eat and consume and buy actually has huge amounts of externalities in the costs. And you can see here for beef, people pay $5, but actually, lots of external costs from emissions and the land use, et cetera. So when I've briefly introduced the book to various faculty and friends in economics, no offense to any economists in the room, they say, oh, we have externalities figured out. We're economists. Anyways, there's a lot of good insight from economists on externalities. I don't want any hard questions from you later. But I think we need to do a lot more in a couple ways. So one is that the systems that are usually sort of articulated, like that cow-beef externality diagram, are focused on the idea that we can actually really accurately price and account for externalities through some sort of market or pricing logic. Certainly, I think trying to dig into that is really, really important. But I think that just focusing on the economics and accounting aspect misses how socially and politically constructed these ideas are. Companies are very actively lobbying and doing PR and communication programs to actually deflect attention from many of the areas that they focus on. A big focus of the book, I have a whole chapter on these misinformation strategies. I won't go over them in detail, but a lot of work from companies like Pepsi in the packaging industry have been on, socializing ideas of the litter bug and individual carbon footprints that actually transfers the responsibility of waste and emissions to individuals as opposed to companies. And I think this is something we need to, sort of reverse and actually understand how, how these, our ideas of what a responsible company is have been shaped by those companies themselves in a way that is very self-interested. I think it also ignores how endemic the issues around externalities are. And there's a sum I list there. The environmental ones are ones that actually get a lot of headlines, but there's a lot of socially oriented ones around income and wealth inequality and discrimination. And most of these costs are actually being borne by people, very far away from where we are here and living in very different circumstances than we are here. And so, we have these sort of wonderful lives that are, not almost completely, but very substantially underwritten by people living in very poor conditions. And I think that is something we need to put a lot more attention on. So that in general is, some of the critique. What I think, looking more positively, I am actually pretty optimistic and sort of reform thinking person. And I do think that actually unpacking this idea of externalities and the societal and political processes underlying that actually can help businesses identify areas for innovation and also how collective action is important in this as well. Let me give you one example of this. As a company I studied called Grove Collaborative. Actually, one of the inspirations for this book was in an interview that I did with the co-founder and chair, who's there, Stu Landsberg, who's now a pretty good friend. And he described to me how when his company, when he founded this, thought about responsibility, it was about eliminating plastic. And you think about this business, I should tell you what they do, I guess first. So they are like a home goods and cleaning supply and health and beauty company and produce all kinds of products that are traditionally delivered in liquid form, which means that actually plastic is a pretty important material because to sort of ship and deliver to consumers, this liquids, you need some non-porous type container. So he said, we are not focused, we're certainly focused on our employees and communities, et cetera, but we realize that if we want to be a responsible company, we have to focus on the externality that most stems from our business, and that is plastic. And this actually focus has led to an amazing set of innovations and business process re-engineering within the firm. For instance, as someone who grew up in the 1970s and 80s, I did not realize that shampoos could be actually delivered in bar form. You actually, didn't need liquid for shampoos. This has been really sort of changing, changed my perspective on things. So anyway, so they create all these innovative products that actually don't use any liquid and have won a variety of awards for this. And it's really positioned them very well in their industry. Also, they were able to create like a costing mechanism within their company to assess the business line managers to whether or not they're actually, sort of reducing plastic or not within their business line. And then finally, they also created a like badging setup so consumers to help educate consumers around this idea. So, as he said to me, it's better to be recycling, but that's actually not the choice we as an industry have. In many ways, many of the sort of ideas I try to unpack in the book are about sort of thinking about sort of waste and other, externalities that companies have in new and different ways, because usually companies are just thinking about, oh, we'll recycle. And even the policy interventions on this topic, like there's a lot of work around extended producer responsibility bills in Europe and the US, frequently focus on recycling systems and funding recycling systems as opposed to actually eliminating and reducing it. And also there's huge resistance to that. In Korea, there just recently some work to have an international agreement on plastic, but the plastic industry basically derailed that. So as I sort of work through the book, sort of where I end up is trying to help businesses shift their mindsets from a traditional sustainability perspective, which is more about doing less harm, to one where how actually can the business systems be created to actually add positively to the world. There is increasing interest in moving from like a discourse of sustainability to one around regeneration, which again sort of takes from this like do less harm to more about sort of restoring, revitalizing, ecosystems, communities, et cetera. One of the examples I give about that is Patagonia. I hate to use Patagonia because they're sort of always the poster child for sustainable business. But I think here it's a really useful example because when I interviewed this gentleman here, Vincent Stanley, who has this wonderful title of Director of Philosophy. So he said, we have been operating at this point, 40, 45 years. And we have always been very focused on sustainability, very focused on the environment, very focused on organic. But actually not until they got into the food business with Patagonia provisions did they realize that actually there was a fundamental, issue with some of the key logic that they had around their sustainability program. So what he told me is that when they were sort of working with farmers and producers on their products, they realized that if done correctly, which is sort of like people did 100 years ago and before, agriculture can actually sort of aid in soil rejuvenation, rebuild ecosystems, foster biodiversity, these ideas of regeneration. And he said, we were a business that was so committed to the environment, but we realized that in our mission statement and our whole perspective is about doing less harm. And the fact that they're admitting they're doing harm is in their mission statement, sort of rethinking in their business, led to this new vision of one business, save our home planet. Lots of working with consumers to discourage and help them just consume appropriate amounts, not overconsume like fast fashion. Things like extending the life of their products around, sort of secondhand marketplaces, repair, reuse, et cetera. Obviously, a lot of upstream type of things too around materials and production. So really, they're looking at their entire value chain and seeing, how can each part of that be built in a much more regenerative fashion. So in closing, one of the things I sort of close the book with in the last section, I have a variety of sort of, policy, investment, collective action, businesses, and consumer factors that can help. And I focus on this idea of sort of no silver bullets. I think that so many solutions are presented as, we need to do this. This is the one thing that is most essential. And given the state of the world, we need to do everything, basically. This is frequently presented to me. People are very focused on carbon markets, and I think their carbon markets are great, but they're part of the solution, or a variety of other policy implementations. So this quote by Eisenhower, I think, it sort of connects the Grove Collaborative and Patagonia example, where he talked about when he was organizing the D-Day landing. Eisenhower was not like a battlefield general. He was one that focused on the logistics and supply, et cetera. And so the D-Day landing, this amazing organizational feat, he said, I never sort of try to make things smaller. I think about making things sort of bigger. And by that, he means, usually when you have a big project, people say, oh, break it down into little pieces. And, that is a way to sort of help solve it. But he thinks that you need to actually see the larger contours of the issue to actually see those connections. And that's in many ways how I see these challenges that we have, that we need to be thinking like, sort of Patagonia, and entering new eras to open your mindsets to making those different connections, because the system we're in, the sort of neoliberal system, promotes things like stakeholder capitalism, which are solutions which are embodied within the existing system. And we need to be, thinking very much beyond that. One of the things I'm very conscious of in general, but also I know I'm here at a school that's focused on public policy, is that I focus a lot of my attention on the private sector and business. And I think that how business and policy work together, it's sort of like a 1-2 punch almost. We're never going to get where we need to go with just voluntary action from companies. The things I've talked about in the book are really excellent as sort of business case validations, innovations to show how things work, but actually need to have them translated into mandatory stipulations through policy. And now that I've been sort of teaching and researching this for 20 some years now, it's been amazing to see some of those things come to fruition, where some of the early, voluntary things have now been sort of moved into more, sort of mandatory. I also think we need many other things, new investment policies and approaches. Ownership is a huge, huge issue, particularly in more developed contexts. Really, it's so focused on making the rich get richer, and has exacerbated income inequality. And there's a lot of reform and very interesting things going on, and consumers too. I think, I'll mention consumers. A lot of attention gets put on consumers, saying, oh, consumer, we need the sort of millennial, conscious consumers are going to save us. And I think that's just another way to deflect responsibility from companies where actually the responsibility should be. I'll finish here that, the time is now. We really need to step up and make change. And I think that, in combination with policy, that business has a tremendous role to play in creating innovations and new models that then can be translated into much more formal laws. And it's really essential that we do this, because this idea of businesses doing this through their own voluntary self-interest, has not gotten us anywhere in 50 years. And so with that, I will turn it over to you, Matt. Thanks.
As I mentioned at the beginning, I'll ask Chris a few questions, and then we'll open it up to questions from the audience. I'm so glad you wrote this book, Chris, because it wraps together a bunch of ideas that I know you've been working on for a long time. And I think this frame of how business externalizes or socializes costs is a very neat way of trying to capture all of that. it won't be surprising to you that I agree with a lot of the ideas in your book, but I do think there's some real questions about the pathway to this positive vision that you're trying to describe. And so let me ask a few of those
Sure.
and try to dig into those
Good.
a little bit. So the first one is you really critique neoliberalism. And I think that, I'll just read a quote from the book. You say, the neoliberal tactic of saying the government should address externalities through taxes or other pricing mechanisms is nothing more than a way to avoid responsibility. I want to dig into this a little bit because I think things like cap and trade and other price-based mechanisms are pretty popular and accepted among the policy community as the way that you solve these kinds of issues, or at least a big part of how you solve these kinds of issues. And so I wonder, as you think about this alternative pathway, what is the role of these kind of traditional neoliberal tools within this positive vision that you're trying to describe?
Yeah, great question. Thank you. So I think that all of those things are totally essential. So I'm not in any way against those, like cap and trade or various sort of pricing or market-based programs for carbon emissions or various, ways to tax and limit things like plastic pollution, et cetera. I think those are really essential. However, I think that so often businesses tried to avoid a broader responsibility that they should have by saying, like, oh, well, consumers want this, so we should give it to them. And then the bad things, is about the government should actually take care of it. I think that there should be a lot more, well, for instance, there's a variety of sort of taxing and other programs on plastic pollution. So should we doing that, or actually not allowing companies to produce things in plastic? I think that, so I'm all for, I think that the only way we're going to get there is through policy, strong policy interventions, but the larger businesses have a lot of ways of distracting from what actually the underlying responsibility they have is. And one is by pointing the finger and saying it's the government's responsibility. So
I see. So it's not a problem with the kind of principle of putting a price on these things.
No.
It's just so hard to implement that that's not really a
so I think that's part of the solution. Certainly that's part, but it's not some magic bullet that is going to solve everything. I mean, we see that, I think these systems are getting better and better, but you see actually a lot of times when you put a sort of price on carbon, companies move elsewhere. And that ends up having some sort of race to the bottom on environment. So now, Europe has the carbon border adjustment mechanism that is trying to address that as an example. But I think that yes, we need to think about valuing and pricing externalities, definitely, but that we can't just stop there. We have to actually think more deeply about what business responsibility is.
Let me ask you about some of these positive examples.
Okay.
And again, I think these are incredible examples that you've pointed to in your book. And frankly, what I appreciate about your book, among other things, is that you have a lot of fresh examples that are not kind of rehashing the old examples of these things.
But they're still small.
However, yes, exactly. Many of the companies that you mentioned in the book are pretty small. So among them, and these are even maybe some of the larger ones, Patagonia, Allbirds, Seventh Generation, Tony's Chocolonely, are all niche companies within their industries that have been very successful in serving a niche customer in a very responsible, regenerative kind of way. And so I was just looking at it this morning. Patagonia's sales are said to be something like $1 billion a year, but the outdoor apparel market is something like $35 billion. So Patagonia's been at this for 50 years, and they have 3% of their market. And so as you think about making this more than a niche thing, right? If Patagonia is really trying to solve the end problem of the damage that's done by apparel manufacturing, what is the theory of change by which we scale those solutions, right? Is it Patagonia selling 30 times as many clothes? Is it other companies adopting what Patagonia does? Is it government regulation? What's the formula here?
Yeah, so again, sort of, I don't think there's any sort of silver bullet, but I would, so of the three options that you gave, the sort of implicit or somewhat explicit theory of the book is the government one. And so, the idea is that, so if you look at Patagonia, so they as just as an example, they've actually been very active in collectively organizing in a bunch of sectors that, around packaging is one, around regenerative agriculture is actually, I guess, yeah, one that I'll say a little more about. So the idea of like regenerative, you see this word all around nowadays. Like, what does that mean? That can mean anything or nothing. Pepsi, Pepsi is big into regenerative. I don't think they have any sort of, way to judge that. They can call it regenerative. Maybe they have a pig, roaming around or something. I'm not sure. So they actually have come together with a variety of NGOs, with other private sector organizations, and created a standard which many people tell me, and I'm not an expert in agriculture, so I can't, is really a very rigorous and important standard that is global now and can be adopted, similar type things by governments to hopefully diffuse that idea. So in many ways, the sort of connecting the dots on the theory is not that Patagonia is going to take over the world, or that they're necessarily are going to be voluntarily adopted by, I don't know, North Face or whomever, because change of large companies is really, really, really hard. But what I hope is that by proving models, collectively organizing to show they work, that we can show that these are actually solutions that can be implemented in a policy way. So
this is really interesting, because I think the kind of accepted wisdom in the social enterprise community is that social enterprises are creating ways of doing things that they hope that companies will voluntarily adopt. And you're suggesting something different, which is that if I'm a social entrepreneur, I should actually be designing what I'm doing in a way that's going to eventually make it possible to be adopted into regulation, not as a voluntary
yes,
practice.
exactly. So for instance, one area where I've seen this that I think is, I think it's going to be a very powerful thing, and time will tell. But the EU recently passed the Corporate Sustainability Reporting Directive, CSRD. I think if you haven't heard about it yet, it's going to be a very big deal because of actually how it enforces accountability for not just EU companies, but actually it's designed in a way that it's actually going to affect basically all reasonably sized companies in the world in a very rigorous way. So this is actually built on the shoulders of a lot of private sector and NGO action around, sort of broadly speaking, ESG or sustainability standards. So we have, 20 years of experimentation, refining best practices, lots of things going on, and those can get adopted by by the government. I think that in like the regenerative organic is one where they're working to try to get that adopted as another example.
Let me turn to the question of local action. So a lot of the ideas that you develop in the book are very global or systemic in nature, which makes total sense given the global or systemic interdependence of the kinds of issues that you're describing in the book. We are in a Center for Cities, and so I wanted to ask you a question about the role of local action. And it turns out also that Chris is an expert in community level analysis of business and society issues. And so, I wonder what you see as the role of local situated action in trying to address these broader, regenerative system level questions. And so if you were giving advice to local leaders or people who aren't necessarily in a position to try to affect these large systems, What advice would you give to them about their role in concert with the other kinds of things you described?
Good question. I guess given this is a Center for Cities, we should be thinking about this. And you really built me up as some expert on community, so I should have some really, really good answer. I must admit that I have not thought tremendously. I mean, the book, as you mentioned, is a little bit more about broader, international or country level systems. But some of the examples, I'll say a couple examples that stand out to me that are things that I think may work. So on like the agriculture and nature space, I mean, we're facing huge biodiversity and nature crises that I think, people here are probably aware of this, but I think the world is focused so much on climate, they're not sort of seeing this. Obviously, land is a local topic, and some of the sort of interventions and companies I've studied, one in India around growing cotton, and there's also around this regenerative organic association, there's a company in Italy that has like a demonstration site where they actually, in both those instances, these are private sector initiatives, but actually they're partnering with governments to sort of refine and hopefully diffuse and deploy these systems. So I think around partnerships, around innovation is one. It may seem like sort of a lame one, but actually procurement is another thing. I think government procurement is something that is frequently underlooked. And I know from the work I've done on B Corps, that has been a huge topic where, there's a variety of standards of who governments will buy from. And that is something where I think that, things like mayors or city leaders can be thinking of.
You might not know this, Chris, but we have a whole program on procurement for cities. So you're not going to outbore us here.
Okay, well, I'll stop then while I'm ahead. So,
my last question. So I have one more question, and I want to invite now, if folks want to ask questions from the audience, feel free to approach the mic, and we'll turn to those right after this last question.
Great.
So my last question is about the kind of call to action of your book.
Okay.
So at the end of the book, you describe some interactions you had with this famous sociologist, Meyersold, who really pointed to the importance of the opportunity structure for successful change making, for successful collective action. And in short, this is like, you need the moment to be right in order for these things to change. And you write at the end of the book that our own moment seems quite propitious, and with the caveat that you wrote this before the election, so feel free to revise that statement now if you'd like. But we've all seen a lot of CEOs and political leaders give talks, and you can almost have a bingo card in front of you that they'll say something like, "We are in a critical moment. The choices we make over the next months and years will shape the course of capitalism or history or whatever the topic might be." And it strikes me that there have been a lot of propitious moments when it comes to reinventing capitalism. There have been a lot of moments that felt like they were on the edge of something, that we were nearing some kind of tipping point. So what makes this moment different than Occupy Wall Street or the WTO protests or the publication of Silent Spring? Like what is it about now that you think creates an opportunity to do something differently?
Good question. I mean, it's sort of, it's a question of like, is the world broken enough that we actually can see that we need to change? And yeah, well, 10 years from now, we'd be saying the same things. I really hope not. I think the next 4 years are going to be a huge challenge. But one of the things that makes me think that we are sort of in a situation where this sort of neoliberal system is frayed so much that we need more fundamental reform is things like the Business Roundtable actually taking on the idea that we need to reform through our own way, but actually, they used to be avowedly profits first, and they're saying we care about society now. Even you mentioned the election, J.D. Vance has railed against neoliberalism and these big corporate titans that are taking jobs from the Midwestern US. the fact that our future vice president is actually railing against this says that actually things are broken to an extent that the world may be open enough for fundamental change. Now, the next 4 years might take us in fundamental change in a way that I might not agree with per se, but I do think that we are at a time where this existing system, even things like, I write a little bit of a book in the book about the trajectory of Jack Welch. There's a book last year, I think it was last year, maybe 2 years ago, published, The Man Who Broke Capitalism was the title of this book. And he, just 20 years later, was noted the CEO of the 20th century. And so by Fortune magazine, which I don't think is a really left-leaning type of publication. So I think the idea that actually even the people that are deeply entrenched in this system are calling for change says that we are at a very serious point. And I, again, don't agree necessarily with the route that they're taking, but it does say that this time may be different than when Rachel Carson published Silent Spring.
Well, and if I can add, one thing that I really appreciate about how you wrap it up is that you are very clear that you don't think there's any silver bullet. And
Right.
so maybe it is the case that now is a propitious moment, and 5 years from now is also a propitious moment. And we're going to need a lot of propitious moments to get from where we are to where we need to go. Let's open it up to some audience questions.
Thanks.
I'll ask you to please introduce yourself and then ask your question. Please, Bill, go ahead.
Hi, my name is Bill. I'm a mid-career MPA student. So on your point of the corporates should internalize the cost, right?
Yeah.
So if they internalize cost, who should pay who should pay for it? Should they increase the price so the consumer pays, or the government provides a subsidy? Because it's not only inflation problem, it's also an equity problem, because if they increase the price by that much, then the low-end consumers can no longer afford it. So it's become a luxury good to be good,
Yeah, this is a super good question. And I did talk a little bit about this in the book. And that's also, I mean, I 100% agree with you. This is not something where we just want to make things more expensive and then people with less economic means have a harder challenge. But there's also frequently a complaint that businesses give why they should not have deeper regulation, because they want to deliver, be as cheap as possible. So I think it's a combination all of the above, and I think that overall, if we can have more effective policy around this, I think that well, first of all, I think there needs to be some business innovation around it, like the example I gave you of Grove Collaborative. That's something that they took on as something they felt was part of their overall mission and responsibility as a company in this world, and devised all these systems and then create ways of companies working together. Like, for instance, one of the examples that I don't talk about in the book that I've come across more recently is a group of about 50 sustainable beauty brands that have actually begun working together on packaging. So they're, L'Oreal or whoever these large companies are, they have a challenge competing against them because those large companies get things at much less expensive. But through working together, they can actually have sort of this scale to internalize, so that it actually doesn't raise the costs as much. So I think it's a sort of all of the above, but it's something that we have to demand sort of policy, and the fact that through companies working together and collective action and creativity, innovation, to try to create new solutions as opposed to just, doing things like they've been done.
Thank you.
So, thank you. Good question.
Thanks.
Great question.
Hi, I'm
Yeah.
Allison. I'm a joint degree student with the Kennedy School and the Business School, actually. So if I understood correctly, like policy and regulation is viewed as sort of like the first lever to sort of encourage better business practices, and perhaps a second lever is changing like society's normative views on like what are the responsibilities of businesses, because policy is inherently like limited and sort of imperfect. I guess I was curious, like in terms of changing normative views towards business practices, like could you clarify explicitly how this is different from stakeholder capitalism?
Sure. So one area where I think it's very different is that, which is sort of at its core, is that the idea of stakeholder capitalism is built on a win-win logic. That the idea that companies to do good in society, they will eventually do well. And I think that is, Matt asked me about neoliberalism. I think that is clearly from this idea that companies' economic returns are the most important, consideration. But so I think that is one area where actually, if we're able to, I don't know if the time is propitious necessarily, sort of shift away from this sort of short-term logic, that hopefully companies can take a more fundamental view of their responsibilities, opposed to saying, oh, I'm going to do this environmental program because it'll save me money, or I'm going to have an employee volunteering program because employees will stay longer. I mean, I think, yeah.
Can I hold for one question from Zoom, and then we'll take one more question from the audience before we wrap up. So Sue asks, it makes sense that consumer products companies like Patagonia are trying to become more regenerative and sustainable, but how can commodity manufacturers be incented to do better? Plastics manufacturers are an example where they create toxic waste, carcinogens are present in their products, and consumers have no idea who these companies are. How can companies like this be incented or regulated into changing their ways?
Yeah, I mean, I think regulated is clearly what is necessary for something like the sort of plastic, anyways, you don't even get me started about, you mentioned plastic. This is a set of, sort of actors that is incredibly pernicious in our world, but hidden away. The lobbying that is done to block all kinds of very good regulation that will actually help the world and probably even help the companies. Companies would actually prefer that. I have actually been attacked a number of times by plastic industry representatives, believe it or not. I mean, I don't realize the things I wrote are so frustrating to them. But so I think that there is, because of the deep-seated interest of and scale of those companies, and there's a lot of there's been a variety of lawsuits and investigations that have opened up a number of sort of internal documents from plastic industry associations and companies, and showed even things like the chasing arrows sign that's on the bottom of a lot of all plastic things. Like they put the number in there. That's explicitly like a greenwashing tactic, even though almost none of that gets, a lot of the numbers don't even get recycled. But if people, their numbers in there, people think they'll be recycled, and so they won't put it on the plastic industry. So anyways, I think that's an industry where we really need to be, there needs to be very much strong regulation, and hopefully through some of this collective action and innovation, it can make it easier for policymakers to see that it's possible to create stringent, effective regulation.
Thank you so much for being here. My name is Sonali, and I'm a master's student at the Kennedy School studying public policy. My question is, given the transnational nature of supply chains and businesses today, would you argue for a more global framework of responsible business, so to speak? And then the second question is kind of related, that how can we create a responsible global framework that doesn't unfairly put arduous burden on emerging economies and emerging markets?
Yeah, two good related question. I'll say, so one area that I think has a lot of promise in this, I mean, because these transnational sort of agreements like, COP, or, there's, like I mentioned, this set of meetings in Korea around trying to get to a plastics treaty, which failed, and the COP process has really become broken. There's actually, through smart regulation at a more sort of country level, I think is one way to address this. And so an example of that is the CSRD law that I just mentioned, which holds companies accountable for their supply chain, human rights, and emissions. And this is important because it's actually legally binding. The CEOs and directors can be thrown in jail. It is something where I was in Malaysia maybe about half a year ago to give a talk at a university, and for a group of YPO, Young President Organization people in Kuala Lumpur. And the sort of trade minister heard that I was coming to town and summoned me to his office. And this CSRD law he had been hearing about, and realized that because Malaysia has a lot of small, medium-sized enterprises that are in the supply chains of larger companies in Europe and elsewhere, that actually a potential competitive advantage of Malaysian firms could be if they could actually upgrade their social and environmental performance and accountability. And he wanted some advice, and actually some people I know are actually working with the Malaysian government now to actually implement this around upgrading the supply, sort of those suppliers. So I think this, again, it's very early stages in the rollout, but I think that around environmental accountability, this CSRD will be very helpful in creating a transnational. I think because I think the EU is smart now in designing the laws like the carbon border adjustment mechanism, so that it's not just ends up being people leaving in a race to the bottom, but actually it's hard to escape it, through sort of going somewhere else. So thank you.
We are unfortunately at our time, so I'll close it here. I want to say a couple of quick thank yous. First of all, to Helix, the production team that's put all of this together, and to Maddie Meister and her team at Bloomberg that's responsible for setting up this wonderful event. Thank you all for joining us for this conversation. Thank you, Chris, for joining us and sharing your insights. And thanks finally to the Bloomberg Center and the Social Innovation and Change Initiative at Harvard Kennedy School for sponsoring the event. Thanks very much.
Thank you.